beautiful people, it's Rickita and I'm back with another video. So in this video, you guys, I want to talk to you guys about something that's actually better than getting just a regular FHA loan. Now, I know I always tell you guys that you guys should try to just get you a mortgage with like a FHA, just a regular FHA. You put 3.5% down, and you guys have the option to do a USDA with no money down. This right here, I think, is way better. Now, I have a client right now that's currently going through the process of getting a mortgage with Navy Federal. I know I tell you guys, hey, won't y'all get some credit cards in Navy Fed? I'm like a big advocate of getting credit cards with Navy Fed because they have so many options out there when it comes down to getting credit cards. So if you look right here on the loans and credit cards, you'll see like all the different credit cards you can get with Navy Fed. And Navy Fed is not shy in terms of giving out $10,000 limits, and your credit don't have to be so amazing. So definitely, if you don't have a relationship yet, you're going to have to get a relationship to get a loan with Navy Fed through a home, but also look at their credit cards. And if your credit's not so good, start off with the secured, because you start with a $200 secured credit card, it's going to upgrade to a $2,000 regular credit card. And this will be the credit card that they'll send you. But outside of that, you guys, if you're getting a mortgage, I suggest that you guys try to get a mortgage with them also. So if you go right here to mortgages, they have a lot of different loans that you guys can do. So they have the VA loan, and the traditional VA loan, you guys, is so great because usually like a regular VA loan, they can go down to like a 550 credit score, sometimes even lower than that. But look at their interest rates right now for a VA loan. And then they have the conventional fixed rate, a fixed rate too. So you guys may want to look into even doing a conventional fixed rate. And I believe with their conventional fixed rate, you're looking at putting 5% down. But this is the thing I want to show you. Let me show you the awesome thing about it. And then I want to compare this to a USDA loan. And I want to also compare this to maybe if you want to do like not just USDA loan is no money down. I want to compare this to a FHA loan. So listen, they have a no money down loan right now. It's called the Home Buyer's Choice. Now they have this loan. If you click right here on learn more, they have this loan out there and they're not restricted to like a certain area, which is really good. You don't have any restrictions. So you guys, if you know anything about like FHA, USDA loans and things like that, like with an FHA loan, you're looking at paying a PMI with that, which is mortgage insurance. So that means that on top of your mortgage, you got an additional payment. And I always tell people too, like usually some of my clients, they see a minimum of $100 that they have to pay every month, unless they put 20% down on their home. And if you guys go with this one with the no money down, you don't even have to pay PMI, which is really good. Right. And then you have fixed rate. So you'll have a consistent payment with them, but you have the same thing with USDA loan and FHA loan. But that's something that they still have too. And the seller contribution, you have up to 6% with them too. Now, seller contribution means that a seller can give you up to 6% of the price of the home. So say if you're at $100,000, right, they can give you up to $6,000 to go towards your closing costs. Like all the things like, your taxes, insurance, the different fees you're going to pay to close on your loan, they can give you up to 6% towards that. You can do that with FHA too, but the point that they have this with your no money down option is amazing. And then too, they have refinancing options available too, which is really good. So this is the rates right now that they have. And you can do something too called buying down your rate, which means that you can pay some of your interest. It's like you have to pay a certain amount and then they can lower your interest rate, which is really good. So you guys may want to look into that. Now, one thing I do want to say about this, if you was to do the no money down loan, right, they're going to charge you right now they're charging the client I'm working with, they're charging them $2,600 to do no money down, which is crazy. You would think that they shouldn't have to pay that. So when I actually was on the phone with the client, and then we actually called Navy Fed, and they told them, hey, if you were to put 3% down, then you can avoid that $2,600 fee. Now, listen, if you guys were to do like a regular loan, like a no money down USDA loan, they're going to charge you to do that USDA loan. They're going to charge you to do that. A lot of people don't know that, because what they're going to do is, say if you were having a $100,000 loan, let's say that, and it was going to charge you $2,600. Now they're not going to give you a loan for $100,000. They're going to give you a loan for $1,200. Well, $102,600 basically. They're going to add that amount that basically they're going to charge you. They're going to add that to your loan, which means you're going to pay interest on it. But they got something better now where if you were to go ahead and just put 3% down, which is better than the 3.5% down, you guys, then you don't have to worry about that fee, which is amazing. And you're going to get that, you don't have to worry about that PMI. So if you were going to do a FHA, no money down, then I suggest you just look into actually just getting a loan with Navy Fed, like seriously. And like I said too, it's easy to get an account with Navy Fed. All you have to do is call them up, get signed up, check out one of my other videos. I'll tell you exactly how you can do it. Get signed up with Navy Fed, and I suggest that you try to get some type of credit card or something with them. Start trying to build a relationship with them, and understand this is going to be better than like just your FHA loan, because you don't have to worry about no mortgage insurance, which is horrible, because that mortgage insurance is nothing. That's the mortgage insurance is an extra fee that you have to pay because you have a riskier loan because you're not putting 20% down. I hope you guys are following along with what I'm saying, but I have so many more videos coming out about home buying, and I have more realtors and mortgage people that's actually mortgage brokers that's going to come on and help me teach you guys more about this, because I realize you can't just depend on your realtor to know everything, and you can't just depend on one person at the mortgage company or even at the title company to know everything. So if you guys are interested in buying a house, definitely let me know. I can help you get connected with some realtors that I'm connected with, and I can even help you guys get pre-approved. But these are like the different loans that they have out there. Look, they even trying to chat with me, you guys. These are the different loans that they have out there that you guys can look into. And the point that you could get a conventional at a great rate, and that's 5% down. So you may even think about putting an extra 2% down just to get a better rate, right? Just to get that better rate, just put that 2% down, extra 2% down compared to just that 3% down. But maybe you guys want to look into that. But I want you guys, whenever you get a mortgage, I want you to always ask the company, what are my fees? What fees could I avoid by just putting money down? And think about it. For that $100,000 loan, if you were to just put $3,000, which is 3% down, you can avoid so many fees compared to having to just say, you know what, give me no money down. I don't want to put anything down. And now you have to pay all these additional fees. Not only do you have to pay these additional fees, they're going to add that onto the loan. They're going to add it onto the loan, which is going to charge you more money in the end, because they're going to charge you interest on that too. So not only are you paying that extra money, you have to pay interest on that. So definitely, you guys, look into this. I really hope you guys have success with getting a mortgage. But other than just Navy Fed, there's other companies out there that have great mortgage programs out there, mortgage packages that you guys can look into. And I can definitely help you guys find a route that's best for you. But I'll see you guys in the next video. Bye-bye.